Jamie, going back to last year, large cap healthcare actually had a pretty decent year relative to small and mid cap peers. What actually drove that rotation?
Well, like most rotations, there's multiple factors involved probably. So I'd maybe point to valuations. I would also point to the interest rate cycle and then also the economic cycle. So on the valuations, as we exited calendar 2020, coming into 2021, we felt that some of the smaller cap stocks, for example, the MBI or the Russell 2000 started to get very stretched, and we just felt there was much better value amongst the large caps. So that was possibly a factor. But then also in a rising rate environment, one then has to think about terminal value, and that really impacted some of the higher growth, more speculative areas of the market. So that was probably also a factor. And then finally, as you move through the kind of mid-cycle phase, economically speaking, that tends to favour high-quality companies. And we're lucky within healthcare. We're blessed with a number of companies that fit within that characterisation, particularly as you drift higher up the market cap scale.
And obviously, we're going into a tighter rate cycle now, potentially stagflationary environment. Is that even more of a positive for large cap healthcare?
Yeah, I would say the short answer is probably yes, and I'd maybe pass it out between inflation and stagflation. So on the inflationary side, we feel that certain subsectors within healthcare are maybe better positioned than some of the other areas of the market to deal with that. So for example, if you've got high gross or high operating margins, you can maybe absorb some of those pressures, and we would maybe point to large cap pharmaceuticals and large cap biotechnology stocks that fit within that. So that would be one. And then on the stagflationary front, if you look in history, healthcare has done reasonably well during periods of stagflation, but the caveats are obvious. The first one would be, obviously it's history and that's not a guide for the future, but the second one is that different characteristics existed in different phases of stagflation. The obvious one that's different potentially now is the low levels of unemployment. But in summary, I would say in that sort of scenario, large cap healthcare is reasonably well positioned.
Okay, well, turning to earnings, a number of companies have reported fairly recently. What's been the vibe from company management?
Yeah, it's interesting. So a lot of the same themes are cropping up, but what's also apparent is that different companies are better positioned to deal with some of those challenges. So for example, input costs and freight costs are a challenge for a lot of companies, particularly within the medical device and supply space. But actually scale is a useful tool, as is vertical integration. And if you have those, then that can hold you in good stead. And the other one is a fast-growing top line. The faster growth you have at the revenue level, the better you are equipped to be able to deal with that. So that would be one factor. The second factor would be wage inflation. And that's been a particular challenge through COVID. That's really exaggerated that. And that impacts facilities, that impacts providers and also services companies. And we just hope as we all learn to live with COVID-19, some of those pressures will ease. And then the final one is COVID-19 itself, particularly in areas like China, where there's still uncertainty as to how quickly we might be able to move back into a more quote-unquote normal environment.
So how about positioning across the portfolios you're managing? There's obviously a lot of subsectors within healthcare. How have you positioned the portfolios?
Well, what we're trying to do is we're trying to really find a blend between having this high level of conviction with some of the really exciting growth areas and actually a slightly more defensive posturing given the broader macroeconomic uncertainty. And so in the short term, we're really focused on what healthcare is going to look like if COVID-19 becomes endemic and we all learn to live with it. And so that would be this idea that patients re-engage with the system, they utilise and consume more devices, more services and more products. And so we're trying to expose ourselves to those themes, and that could be through facilities, that could be through medical device companies, and indeed that could be through pharmaceutical companies as well. On the more defensive side, one of the things you'll notice of the portfolio now versus a few years ago is we own a lot more large cap pharmaceuticals, and that's really quite defensive. And we just take the view that regardless of the economic climate, we should be able to find companies that can deliver the earnings the market expects, and we just think they're maybe better positioned versus some of the other subsectors we look at.
And within the trust that you manage, you're utilising your gearing. Is that a sign of confidence?
We do have a high level of conviction that healthcare on a relative basis is an interesting place to be in the short term and indeed in the medium term. And we're carrying leverage around the mid-single digit, but we're also trying to balance some broader macro uncertainty as well, because we do have the ability to take that higher if our conviction grows, but also we have the flexibility to reduce that as well if the reverse happens. So I'd say that where we are now is a balance between that conviction with healthcare, but a slightly more cautious view of the broader market.
Okay, and I'm going to ask you a question about M&A. Do you expect to see any more merger and acquisition activity in the sector?
So healthcare is, highly fragmented in most of the subsectors we look at. Companies do have strong balance sheets, and we think they will look to use their capital to in-license or to acquire external assets, really to complement what they have internally. So the answer is yes, we do expect more. Clearly, we will never know the timing, the participants, but within biotech, within pharma, within medical devices, those are the sort of areas we would expect to see more activity. It's just a case of when and where.
And Jamie, from where we are now, visibility is obviously low, and perhaps it's an unfair question, but what is the outlook for large cap healthcare? Cautiously optimistic?
Well, what we have is an industry where the fundamentals are strong, and in fact some of the growth that we're seeing is accelerating. Secondly, I think valuations are supportive. Now, the valuation gap is closing a little bit versus the broader market, as one would expect. But certainly, I think valuations are supportive. And then finally, as we discussed, the macro backdrop is supportive for large cap healthcare. So I think a combination of those three things would lead me to believe and be comfortable with saying that on a relative basis. I do believe that large cap healthcare is an interesting place to be right now.